Welcome to The Mortgage Voice with Jeff Barton, your voice in the mortgage industry. Each week on this program, Jeff and his guests share their expertise, personal anecdotes, and the latest industry news to keep you in the loop. Now, to provide you with insight and help you navigate the consistently changing world of real estate lending, here is your host for The Mortgage Voice, Jeff Barton.
Welcome, everybody. I'm Jeff Barton, your voice in the mortgage industry. 888-713-2929. That's the telephone number. And if you pick up the phone and give us a call, we can talk about mortgages. It is unbelievable in the mortgage industry right now. And I say that because I'm involved with several different aspects of it, from obviously originating loans to organizing a terrific company to originate loans, as well as selling loans on the back end in the secondary market. Let's see, refinances are down, and they're down because rates are up, obviously. And we look to June. I guess I've just read on the internet at Mortgage News Daily that the interest rates are going to rise probably another quarter point. You know, we're on the slow trickle of and I heard a very funny thing the other day about trickle-up economics. Think about that, right? I mean, Daryl, just jump in here for a second. We've always heard trickle-down economics, but I heard some Republicans say, you know, the Democrats and their trickle-up economics. What does that even mean?
It can't really mean anything. When you think about it logistically, and Isaac Newton talked about it a long time ago, that don't happen.
No, it doesn't. Things fall down, they don't trickle up.
Wasn't trickle down Reaganomics?
Yes, trickle down is, Reaganomics was supply side economics, was basically the famous Jesse Jackson quote of the time was, rising tides don't raise all boats. I don't know whether that's here or there, but anyway, this is Jeff Barton, and this is The Mortgage Voice. Thanks for tuning in. KMET, KCAA, and K-Tahoe, as well as the Roadrunner. We're on each and every week. Those terrific stations bringing us to a number of different listeners around California and some parts of Nevada. We do bring to the show, as I said, each and every week, and we try to mix it up a little bit. We bring a little bit of this, a little bit of that, but mostly information about mortgages, mortgage programs, and the difficulties or the ease by which you can either qualify for a mortgage or you can't get a mortgage. I wanted to dedicate today to Purple Tie Day, and anybody who's watching the show can see that I have one on. And what does it mean? It means it's Anti-Fraud Week here at Malibu Funding, and I bring that up only because, look, when money's tight out there, and it is tight, when the real estate market is tight, and it is tight, we're going to bring Dennis Carrillo on, who's been on the show several times. He's going to talk a little bit about what's going on in the real estate market locally here in Los Angeles, San Bernardino, and Riverside counties, those places that the show is being listened to from those great stations I mentioned. I want to shout out to Connie Hernandez, George Gonzalez, and a number of people out in the Inland Empire who we talk to and use and work with every single day, a lot of people in the trenches. But when we get back to fraud, and because of the market, because the real estate is really tight, and because mortgages are not easy to get to, and because companies are searching for products, programs by which they can fund deals in order to keep their doors open, and believe me, when you hear about companies consolidating, when you hear about different companies in the mortgage industry either being bought or being sold, it's because the originations are down. I'm going to tell you a figure right now. Daryl, let me ask you a question. How many loans do you think we did less this year than last year if you go back a year?
What kind of loans you did less of this year?
The entire country. How many loans less today that we're doing than we were a year ago?
Probably 20% less.
1 million loans less.
Okay.
Now you think about that.
As a percentage, what is that?
You know what? I didn't do it. I'm sorry. I'm in the percentage business, and I didn't do that one. But 1 million less loans out there, and you think of all the different companies that you hear. You hear them on the radio. You read about them in online magazines and online advertisements that pop up. Hey, listen, you can go to any of these online companies, and whether it's Zillow, whether it's Trujillo, whether it's Realtor.com to look for properties, or whether it's Best Rate Capital, Best Rate Finds, anything to look about rates, and you will have a gazillion different companies who have paid money to Google or Yahoo or whatever the search engine or whatever the company that you're using as your browser. They have paid to be able to advertise to you when you punch in those keywords. The reason that there are so many of them and why there's so many of them is because we're funding. So 1 million different loans have been funded less this year than were last year. So this tells you that companies are really out there to try to get your business. Now, what does this have to do with fraud? Well, companies as well as people, and I would say that the consumer is right up there with anybody who would consider doing something like fraud. And we're not talking about nefarious fraud. We're not talking about, well, yeah, we are talking about redoing documents. We're talking about false bank statements. We're talking about people who will create websites, who will create fake phone numbers through VoIP, it will create all kinds of ways to verify that they are working and making a certain amount of money. And there are particular loan products, and believe it or not, you don't have to show your taxes on every loan. We talk about it every week on this show. We bring people who are non-QM people, whether it's Angel Oak or Velocity or Athos Capital or any number of companies out there who are, mainstream lenders, Nations and United Wholesale or Franklin American. A lot of these companies all do verification of employment loans, meaning that they're not going to call up the 4506T from the tax people over at the IRS in order to verify your tax returns. So they have these programs which are really employment. They want to verify that you have a job and that you're making W-2 wages, okay? So what happens is you have to produce them your W-2s, you have to produce to them the person to call at your office through a verification of employment. Now, if you are of a mind and you are a crook, you can figure out a way to make all that stuff look 100% legit, which they aren't. And so if you're out there right now and you're considering this kind of thing, don't do it, please. $1 Million with a company or with a real estate agent who are saying, hey, look, I know a person. Just, look, just go to somebody legit, because you either can qualify or you can't. Now, I know when the market's tight. I know when real estate is not easy to get. I know when you need to have a certain income in order to qualify for a loan. Hey, look, I know you're not going to default on the loan. I know you want the loan and can make the payment. You just can't prove that you can qualify for the loan. And there are some borrowers out there that'll do this. So as being Purple Tie Anti-Fraud Week here at the Mortgage Voice, I just want you to be aware that these kind of scams are going on out there in the marketplace. And it occurs every time rates rise, every time we get in a market where real estate prices are rising. 6.5%, 7% last year in Riverside, San Bernardino counties, which are some of the top counties in America in terms of rise. And right next door over in Las Vegas, Nevada, went up 13% last year. And Los Angeles County, about 6%. Orange County, where, by the way, I think you've got median home price of $1 million in Orange County. Think about that for a second. Now, where are you supposed to live? I understand the pressures that you have on you to want to get a house. You're sick of renting. I'm in with a client right now, and her and her husband, they want to buy. He's a vet, so he wants a VA loan. We've gone out and we've looked at many, many different houses. We've put offers on several. But the fact is that they just can't compete with what's out there in the market on all cash offers or on loans that are putting 20, 25% down. VA loan is 100% loan. So if you're out there, I understand the pressures. I know what it takes to get a loan, and I know that the pressure's on you because you just don't want to pay rent anymore. If you think real estate rates are going up, and they are going up. Let's face it, another quarter point in June, it'll probably bring it up to 4.5% to 5% on most people, which is 2% higher than it was 2 years ago. I understand that the costs are going up, but that means nothing when it's comparing it to the rents. Rents in on the west side, which is anything east of the 15, they're all going up. 1, 2 bedrooms are going up by 10, 15% a year if they're vacant, if you can find them. This client I'm talking about that I'm working with, now granted we're talking about here in Los Angeles County, but she's looking at $4,500 a month rent. Now granted she needs a 3 to 4 bedroom home, but that's still $4,500 a month rent. So we're looking in all kinds of communities, and they're saying, okay, maybe we should, buy this really overpriced property because, I'd rather do that than pay rent. And that's when you have to make the decision. Do you want to, when you want to sell this property, be in the property for at least 10 years? Because it's going to take that once the recession hits, and we're at the end of that line. 8 to 10 years, that's usually what it is between recessions. And so if you continue to look at 2010 as where we were when we started the I guess, the upward swing in the economy. It's now 2018. That's 8 years. So maybe we've got another year, year and a half. Hey, what about if the Democrats win? What happens to the economy when the Democrats win? What happens if Iran starts to make waves with the oil prices and they go up over $70, $80 a barrel, which, by the way, it's over $70 now. It wasn't a year ago that they was under $45. So there are a lot of things contributing to the pressure on you to want to get into a home that you can build equity. Don't do it. It's not worth it. And word to the wise, find a professional who can help you get a real loan and a property that you can get into that you can afford. I'm Jeff Barton. I'm your voice in the mortgage industry. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton. I'm your voice in the mortgage industry, 888-713-2929. That's the telephone number here. If you give us a call, you can get questions answered about your mortgage. There's a lot of things going on in the mortgage market, as they always are, and I want to help you get those answers. And the reason is because, you know, as we talked about in the first section of the show, housing's tight, and you know, what you're doing out there to try to get a mortgage, you need to talk to real professionals, people who really know what they're doing. There's no way that you're going to use an app on your phone to be able to understand and get the answers, questions that you need, especially if you're just not a cookie-cutter type person, and I don't know anybody that really is. 888-713-2929. That's our telephone number. If you want to get in touch with us by email, info@malibufunding.net. Malibu Funding sponsors the show. Their NMLS number is 79620 for those of you out there, and I really appreciate that company sponsoring what we do here on The Mortgage Voice. Okay, that out of the way, I wanted to talk to a great old friend of the show who's been on many times talking about reverse mortgages, and Tim Grayson has been kind enough once again to come on the show and educate us on what's going on with reverses. Tim, how are you?
Hey, pretty good, Jeff. How are you doing?
I'm very good. And by the way, for those of you out there who are Oregon fans, yes, Tim was the kicker for Oregon many, many years ago. When was that, Tim?
Oregon State.
Sorry,
yes,
you know what?
Great.
I do that every time. And I know it's the Beavers. I do. It's not the Ducks, it's the Beavers. I just had a son who graduated from college up at Lewis and Clark in Oregon. So I had occasion to be up there last weekend.
Oh.
Really fun.
Very nice.
Yes, very nice. Okay, give us the 911 or the 411. I guess it's not an emergency unless you really need a loan. But what's happening with reverse? There was a lot of changes last year, and what are some of the opportunities that maybe we've missed because of the hysteria around the headlines?
Well, there's been a few major changes. One, which was available, then it wasn't available, now it's available again. And that has to do with the PACE and the HERO program that a lot of seniors have attached to their home. It's basically solar panels. The city comes on in and puts it in, and they basically charge them through their property taxes for the payment of the system. And before, you can go ahead and just do a reverse mortgage, and they would pay them off. I mean, sometimes those are about $45,000, $50,000, those systems they put on home. Then the government shut them down. They said, if you want a reverse mortgage, you're going to have to pay that $45,000, $50,000 out of your pocket, and we will not put it as a part of a loan, which, you know, most people don't have that thing around.
Of course.
But in the last few months, the government, after a year of going back and forth on it, now they're able to go ahead and to put that amount of money into the loan. So if people have those solar panels put on their property and they got a PACE or a HERO loan attached to their property, they can now get a reverse mortgage and have that paid off through the proceeds of the reverse mortgage.
Well, that's a real benefit to people, obviously, who need the money, who have been stuck because paying it out of pocket rather than rolling it into the loan is a problem. How does it affect the amount of money you can take out? Do they add it on to the amount, or is it just included in the amount?
Well, let's just say, for example, if someone was getting a reverse mortgage and they had, their home was clear and free, and they owed $50,000 on the PACE program.
Yes.
Let's say they can get $250,000. Well, $50,000 of that would go to pay off the PACE HERO program, and the other $200,000 would go into their pocket, of course, tax-free.
Okay, that's great information, Tim. What do you have some other, like, for instance, what is the limit that someone can take out of their home if it's fully paid off?
Oh, that's another thing too, and that has happened in the last several months here as well too.
Right.
They increased what's called the lending limit to $679,650. Now, that doesn't mean you could get that amount of money out of your property on a reverse mortgage. It's just a calculation basis where they take your area that you live in, your age, and certain other things, and they tell you exactly what you can get. So basically, there has never been a time where people can get more money out of their house on a reverse mortgage than since here recently. And way back when, probably about I'd say about 10 years ago, that lending limit was only $417,000.
Right.
Then it's been creeping up, and most people think, that the government was going to go ahead and drop it down, but actually they increased it. So for those out there with a higher balance on their mortgage that probably didn't qualify for a reverse mortgage before, now they can.
Okay, so all right, I want to do a reverse mortgage, and I just want to know how much money I have to have in my house. What kind of equity do you have to have in order to do a reverse mortgage? Is it 50%?
Well, that's kind of a good rule of thumb to start out with. Let's just say you're, somewhere around 70 years old or so, and if you had, 50% equity in a home, you could, pretty much use that as a rule of thumb. But as you are older, you can get more money out. If you're younger, you can get a little bit less out. But basically, again, they go off of calculations based upon the area you live in, different zip codes,
right,
and your age. So, obviously, the older you are, the better off. But they also, here's another thing, too, that they recently changed. People, some people, you'll have someone 65-year-old that's married to a 55-year-old.
Right.
And the government, the minimum age to do a reverse mortgage is 62.
Right.
But now they have just changed it. So even if you're married to a younger person, they will allow that younger person to be on the reverse mortgage and still participate in getting, obviously the cash out and also the line of credit. So if say the husband was older and he passed away and, the wife is 55 years old, she would be in possession of that reverse mortgage until for the rest of her life, and still having access to all the funds that are that were pulled out, plus obviously the line of credit too. That's another major change that they just came up with as well.
Oh, this is Tim Grayson, who is talking about reverse mortgages. Tim knows more about reverse mortgages than HUD, in my opinion. Anyway, so qualification for a reverse mortgage. Obviously, there's a great need for cash when you get older, especially if you have some health issues and other things going on in your life. Other than, however, taking money out, how does it help you in reducing the payment or having no payment on your mortgage if you currently have a mortgage?
Well, obviously, let's just say you have a mortgage on a property and you're making those mortgage payments, you got a 30-year fix or something and you got 20 years to go. Well, you got plenty of equity in your home or what have you, and what a lot of people are seeing is, hey, listen, I'm 70 years old now. I don't need to pay for another 20 years or so
right,
where I'm 90. I mean, what's the point of it? I've already got all this equity. At the very least, what it could do, there's usually a couple types of people that do reverse mortgage. They like the one where they just want to get as much cash out as possible so they could do the things that they want and have security for themselves. And others that say, you know what, I just basically want to stop my payments and I want as much equity in the property as possible. One thing that people can go ahead and do is say, hey, listen, let's just say the person wants as much equity as possible. They could do the reverse mortgage, eliminate the amount of money that they're going to or payment that they would have to do every single month, which would be a very nice thing.
Yep.
And more than likely they'll get a lump sum of cash at closing. Now, if they don't want that $200,000 or $250,000 or whatever, they could literally take that money and send it right back to the lender, and it'll go right off of their balance, and their balance would be pretty close to the same as it was before. Only now they just don't have a mortgage payment. And also too, in most cases, they also get a line of credit. Now, that line of credit, if they never touch it, their balance never goes up.
Right.
But that line of credit keeps on growing every single month. So literally, they could just do the reverse mortgage, send that money back, keep the balance about the same, and have that line of credit growing over time. It's usually around a 5 or 6% rate. It's all guaranteed by the government, and which is a nice return.
Right.
And it just keeps on growing, and your balance is never affected. So that's one thing a lot of people don't realize you get with the reverse mortgage as well, too.
Now, quickly, I know that you can buy a home with a reverse mortgage. Can you go over that a little bit for us?
Yeah, a lot of people do, and a lot of people that are downsizing too, maybe selling their property and they want to get another property as well too. They could do that as well. You could go ahead and just like a regular purchase, you could do a reverse mortgage. But in most cases, let's just say if they sold a home and they want to move to another home, heck, if they're going to buy a $400,000 home and they sold their home and they have some funds, maybe they put in $200,000 down, basically, and they'll never have another mortgage payment for the rest of their life. And when they pass away, they could will the house just like any other loan to their kids or whomever they want to lend it to. That's one thing that a lot of people don't realize is a reverse mortgage is exactly like a regular loan. The only main difference is you don't have to make a payment.
Right.
Now, some people actually do make payments just to keep the balance exactly the same.
Of course.
You know, they'll pay the interest.
You have an option, right? You have an option to pay some of it, part of it, all of it, none of it.
It puts you in control, not the bank.
Right.
So, which is especially when you're getting up in age, you don't want some big scary bank.
Right.
You know, waving you to the finger at you and say, you owe us this, or we're going to take your house from you, or whatever. You know, reverse mortgage puts you in the driver's seat, gives you all the controls, and you can do exactly the way you want to go ahead and live.
Hey, Tim, thanks very much for coming on the show. That's terrific information. Once again, as always, Tim Grayson, of course, our residential reverse mortgage specialist. Tim, thanks for coming on the show.
You got it, Jeff.
Thank you very much. And I'm Jeff Barton, your voice in the mortgage industry. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For questions or comments, send emails to info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton. I'm your voice in the mortgage industry. 888-713-2929 is our telephone number. If you pick up the phone and give us a call, we can help you with your decisions. You got a lot of decisions if you want to buy real estate right now. Rates are going up, product is scarce, home prices are going up. Do I want to buy and work in my office space? Do I need a mixed use? Am I looking at industrial properties? Do I want to move soon? There's so many decisions that have to be made, especially in a market that's tight. Real estate prices are really, by sellers, they want the highest, obviously, best price that they can possibly get. So if you're a buyer, you got to be careful because you don't want to get caught in the upside down situation. So if you've got any of these questions, give us a call and we'll be happy to help you, or we can direct you to somebody who can help. In certain times, there are situations which are beyond your knowledge, beyond what you can possibly know. And one of those things is if someone passes away who owns a piece of property, what happens to that piece of property? If it goes into probate, if it's intestate, if it's without will. I mean, there are a lot of things to just, talk about. I'm involved in a real estate deal right now. It is very similar to this. So we decided to bring on to the show Amir Saif, who's works for Malibu Funding. Really happy to have him back. He's our probate specialist. Amir, how are you?
Great. Thank you for asking. How's your day going on?
You know what? The day's okay, although I tell you what, the business is stressful because product is scarce and the ability of people to qualify is harder because it looks like rates are going to go up next month, so they're already pricing in the difference. Be that as it may, I wanted to ask you a little bit about your business, what you're doing for clients who need probate, or what are you doing for, in order to, let's say somebody wants to get in that into the business. Explain a little bit about what it is so that you can whet the appetites of those listeners who want some information.
Of course. So my specialty is in probate, short sale, settlement. So we deal with all types of situations. Let's say somebody has passed away. If they have a will, then we'll talk to the people who are in charge. Or if they don't have a will, we'll buy the property from the courts.
Right.
So there are two types of probate. One type, they need a court approval, so we have to go in front of the judge and buy the property. One type, we don't need to deal with the judge, so we can even get a loan on that property. We advise our clients on what type of short sale or probate is best for them, depending on their situation. But in either situation, they can buy the property $50,000 to $100,000 under market price, fix the property so the equity would be in their own pocket instead of somebody else's.
Now, why is it that probates are sold under market? Why is that? Just because the court takes control and it's too much of a hassle in order to try to get maximum price? Or what is the reason for that?
Probates usually take 2 to 3 months to close, sometimes more, and people can come with the cash and overbid you.
I see.
So it's really stressful. A lot of people don't know how to do it, and they need a professional to guide them through it. And if they don't know the right people, they usually lose in probate. So a lot of people don't like to deal with probate because they don't know the in and out.
I see, and that obviously comes from the experience that you've been doing it for a while, and I'm sure you have a number of investors who trust your judgment and send you down to the courthouse. Is that right?
Of course. For example, let me give you a situation. There was a property that somebody actually bought the probate, and they waited like 3 months to close. On the day that judge wanted to sign off, we went in with the right papers, and we overbid with $20,000 more. And since they didn't have the cash, they had to give up the property, and it took them 3 months. And we just walked in with the right papers and overbid with $20,000, and my client made around like $100,000 on that property.
Oh, that takes a great deal of sophistication. And not only that, but you have to know what is available or not available. And I don't know if they have public records to find this information. So obviously, ferreting out the information about the possibility to do this kind of deal is not easy to get either.
Of course. For example, that property on the MLS listing showed as active under contract or pending.
Right.
So a lot of people would think that there's no way that they can get that property because that property already has the offer.
Right.
But you know how to go in front of the judge and pay more and get that property.
Right, because the judge's job is to get the highest price for the family, I assume, or the heirs, or whoever is going to get the proceeds.
But you cannot just walk into the court and say, okay, I want to pay more. You need to know what you are doing. You need to be in contact with trustees, lawyers, and everybody.
Right, and as you said, because professionals really are needed in a situation like this, an amateur, there's no way that they can come in and secure properties like that. Can you shout out your phone number, Amir, a little bit? I know that we have it on the screen for the TV, but for the radio people, if you shout it out, that'd be terrific.
Of course. My cell phone number is 310-993-3255.
Okay, terrific. I know you also do short sales, and I know that that is, you know, people are saying short sales in this market, and surprisingly enough, and I believe in our last conversation, the last time you were on the show, you said, yes, there are pockets in Southern California that still have people upside down on their houses. How would you guide someone through that process?
Of course. See, short sale is the last measure that anybody would do. A lot of property owners, they don't want to sell their property, and they think that something is going to happen. They're going to get money from somewhere, and they're going to pay the bank. And they wait till it's too late. So we have to come in with cash.
Right.
We have to give some cash to the bank so they wouldn't put the property on foreclosure. Because if it goes to auction, they're going to lose a lot of their equity.
Of course.
So we usually, when it's too late for the client, we come in, we pay the bank some money. If the client wants to keep the property, we can come up with a deal with them, or pay off the bank, pay off the client, the equity that they have, and of course, we need to make some money in between too. But it's a win-win situation for both sides. Instead of losing their whole property, they lose part of their equity, but at least they're working out with most of their equity instead of losing the whole thing.
You know, there's so many people out there who will take advantage of a situation like that. I know we've talked about the morality and the ethics in our business and trying to help people out rather than just, you know, carpetbag them is a great reason why I wanted to have you talk about it. Can you give us an example of a couple of couples or maybe a person
Okay, yeah, let's say we had an old couple. I can't say names.
Of course. Yeah, yeah.
They owed around like $600,000 on their property, but they refused to make a deal with the bank, and they couldn't come up with the money. So the bank was going to put their property on auction. So we came in, we paid the late payment to the bank, and it took us 20 days, and we put a stop on the auction date as well. It took us 20 days to make a deal with the bank, and even the bank agreed to give them $100,000 off of whatever they owed.
Right.
So instead of paying the bank, they paid the bank $500,000. And that $100,000 difference was the money that we made. They didn't lose any of their equity. They walked out with their equity. We made $100,000. The bank didn't have to go through the
foreclosure process, of course.
And everything, yes, and foreclosure. So it was a win-win situation for everyone.
Well, so in a situation like that, then they did sell the property, right, in order to repay the bank. They repaid the bank, kept their equity, and the difference of what the bank owed and what they forgave was the fee that you collected.
Of course, and as I said, if they want to buy the property back, we don't have any problems. We want to sell the property ultimately too. But if they can qualify or they can use a family member to buy the property,
right,
it's their choice. In that situation, the old couple wanted to move to another state, so they were happy with the equity that they could take out. And I believe they bought a much bigger house outside of California with that money.
Well, absolutely. Anything you sell here in California, because the prices are so high, you can go to a different state and get essentially the same property for, much, much less.
Of course.
Yeah, exactly. Okay, we have about a minute left. Give me your ideas as to where the market, your particular market, is headed, or is it always pretty much the same because there's always people who are in need of either probate help or short sale help?
Okay, the property prices are going to go up.
Yep.
There is no inventory in the market, and we are building apartments right now ourselves too. So the city is increasing the fees for developers.
Yep.
So that's going to add the cost for building. That's going to make sure that the property prices are going to go up too.
Yep.
And the only reason feds are increasing the rate because they want to slow down the increase in property prices.
I agree.
Definitely the property prices are going up. And I would tell anyone if they want to buy property, in my opinion, it's the best time to buy because the more they wait, the more the properties are going to go higher.
That's great advice. Listen, Amir, thank you very much for coming on the show. We're up against the clock here. And, I always enjoy our conversations, and I know you're doing great business. Thanks very much for coming on the show.
My pleasure. I wish everyone a great day.
Thank you very much. And that's Amir Saif from Malibu Funding. I'm Jeff Barton, your host for The Mortgage Voice, and we'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. 888-713-2929. That's our telephone number. I didn't give very many contact information situations to you. So here it is, info@malibufunding.net. That's our email address. If you want to see us, you can go to themortgagevoice.com and you can see this show as well as the Las Vegas real estate show. It's gotten popular, and I really appreciate those people that come and watch the show. And when I say popular, I say, at least 2 or 3 people a week come to it. Not that many, but we're growing, and we're trying to make that a part of what we do here for advertising for the show and also the ability to be able to bring you the information and the news that you need for the show. Each and every week we bring great guests to the show, and Dennis Carrillo is the same, and we really appreciate Dennis coming back on. MLO from Malibu Funding, Inc. Dennis, how are you?
Good, Jeff. How you doing?
I'm just terrific. Thank you very much. How are things going? And tell me a little bit about the market and what's happening in the real estate world.
Well, everything's going good. Everything's going strong still. Prices are still holding. I mean, weather's pretty nice. And Southern California is always a booming economy over here, so I can't complain. Rates are still good as well. We've been seeing them kind of go up a little bit, but they're still really good rates. Overall, I just think the market is doing great. The only thing that's not looking too good is rental rates going up. So
yeah, I've noticed that. What do you think about that? We talked a little bit about it earlier in the show. Rental rates here, and obviously on the west side over in Los Angeles, anything west of the 15 seem to have been going up exponentially. What do you see?
I see the same thing. I just see rates that they keep going up to where it's hard not to consider buying.
Right.
A lot of people that I've come across, they're a little bit hesitant. They think that the market's it's gonna be a bubble, it's gonna pop, but I don't see that happening. In reality, I just see the rates for rental rates are still going up, and it's just hard not to consider not to buy. It's a lot more benefits to being a homeowner than paying someone else's mortgage. So,
now, I know you. Yeah, I know you represent buyers and sellers in the real estate market as well as do loans. What are you telling buyers? I mean, everyone is worried about, if I buy too high, I'll be stuck in this property and I'll, be upside down and underwater, because some people have a longer memory than others. What are you telling your buyers?
Well, I tell my buyers that the only time to not buy is when the only time that's bad to buy is when you have other properties, maybe that you're just thinking about holding off. But if you're renting right now, it's hard to just sit there and watch these. You're waiting for the market to pop. Every year that goes by that you're renting, you're throwing away $20,000-$30,000.
Right.
So every year that goes by, you're just thinking, well, what if the market does pop, the bubble bursts, and the prices come down? Then what do you? If 2-3 years go by, that's 60, 70, 80 grand or more that you threw away. So how much are you really saving by waiting for the market to come down? Tax benefits are great as well. So I think that it's never a bad time to buy if you're renting.
Yeah, I agree. And how are you reaching these renters? Are you just trying to introduce yourself through obviously electronic or online? Or are you putting in ads? Or are you just meeting people? How is it that you're getting to these renters? Because I agree with you. I think renting is a stupid idea, unless of course you just on a fixed income or something.
Absolutely. We're reaching the renters, but we're doing some marketing out there. But a lot of the open houses, a lot of people that are neighbors that come in that are just looking. That we've focused on a lot of teachers as well that are just the W-2 employees that are just unaware of what their options are. So it's not until they walk into an open house or word of mouth that you come across people that are just kind of looking around. And there's no high pressure with Malibu Funding, so we're always here to help, and it's kind of a one-stop shop. Being able to be a loan officer as well, sell real estate, just kind of answers, jack of all trades. We answer all the questions for you. So I think the biggest question is people are scared to buy because the unknown is what the issue is. When you're not aware of what your options are, how much you qualify for, that's the biggest difference. Just not answering the unknown there is what holds people back. But once you find out the answers, you're kind of like, oh, wow, I should have done this a long time ago.
Okay, you touched on it, and I want to speak to it. The person who is wanting something or wanting to buy a house or some real estate, but there is that mental block that they're afraid of. How do you bridge the gap? You're an experienced agent. How do you assure them? What do you do to help them over the hump to be able to get comfortable with the fact that home ownership is a great idea?
Well, the biggest thing is, the people are always scared to run the credit. They feel that if they run the credit, that their scores are going to drop tremendously, or that, something's going to happen with that. The biggest thing is starting with running the credit, seeing what's there, seeing if there's any blemishes on there that could easily be fixed. The last thing you want to do is say, hey, I'm ready, and then jump into it and find out you could have resolved some issues, or you could have improved your credit score, 10, 20, 30 points very easily, and you could have gotten a much better interest rate. So the biggest thing that we have is we do the pre-qualification. I like to walk step by step with clients and tell them, give them the options. Options are the best deal for them. Here's a what-if scenario, worst-case scenario, best-case scenario. just giving them choices on what they want. A lot of buyers they feel that they need a huge down payment to be able to come in order to qualify. But there's many programs out there, 1%, 3%, FHA, 3.5%, that are very minimal down payment, and they're not FICO score driven. So there's a lot of options out there. So don't be scared because you don't have a huge down payment. Many people don't know they can use their 401k. They can get gifts from family members. So there's a lot of options to help people buy. So we're here to help, to buy, not to deter.
Yeah, I've worked with a client recently who has seen many, many houses, and they just can't mentally get by the fact that they're afraid that if they buy it at the market price today, that in 3 years when they want to sell, when their kids are out of high school, that they're going to be, either in a bad market or there's some kind of small or big recession. They just can't get by that fact, and I think you addressed it a little bit earlier. Speak to that a little bit. How do you get those people to understand that it's in their best interest to buy?
Well, I think people are still kind of stuck. Some people that I talk to are still kind of stuck on the last, the last time the bubble happened, it popped.
Yep.
But, they don't understand that was a much different market with all those creative financing loans that were allowed to happen.
Yep.
You zero down payment. The whole market has changed drastically. So now you either qualify or you don't. I don't see the market popping the way it did at all because everyone the last since then have, they qualified. So the market's not going to crash, in my opinion, the way it did. If it did, it would be very gradual. It's not going to be a big, kind of just shock. All of a sudden, overnight, everything just changes. Programs change. No one's qualifying. So I don't see that happening. I just think that if you buy now, you're going to be in good shape. People last year, they told me the same thing. I don't see prices going up higher and higher, and we had, about roughly a 40% increase. So, buying real estate is just a big step to helping you gain some financial wealth in your future. And the tax benefits alone are just great. Sitting there, you can't write off rent. So,
right.
That's kind of self-explanatory on that.
Yeah, no, I agree with you. Hey, could you shout out your phone number for those people who are listening right now who might want to talk to a terrific loan officer agent?
Absolutely, absolutely. Again, Dennis Carrillo, my number is 818-668-4273. Again, 818-668-4273. And if we're able to also help you represent you via the buying side or selling side, help you do loans, we'll give you a nice discount too. So don't be afraid to give a call, free quote, no cost, no obligation.
Great, excellent. A couple, 3 minutes left. Market, where do you think it's headed in terms of rates, and where do you think it's headed in terms of prices on real estate?
Well, I think prices on real estate, I think they're going to continue to go up slightly, but not too much.
Right.
And rates, I think that they're going to also follow suit. They're going to go. They've been going up little by little, but they're not going to be huge increases. I think they'll be gradual. So I think there's still solid rates and there's still good prices. So and with rates, with rental rates going up, they're getting close. They're getting close to being right there along with being a homeowner. So you might as well do it.
Yeah, excellent. Also, one last thing. Personally, do you invest in other things? We had on the show last week, we had somebody in the cryptocurrency world. We've also had somebody, in other forms of like the pot business, the lending to the pot business people. In terms of you personally, what do you think might be a great idea for somebody who's looking for something creative, maybe not necessarily outside the real estate world or the lending world, but with either a product or some kind of either in one of these two worlds? What do you think is a good idea for someone to get into?
Well, I'm kind of more on the conservative side. So, I've heard about the pot business as well.
Right.
Kind of going that way, but that's kind of gone out the door. I think that, I'm playing more safe mutual funds, stock funds, annuities.
Right.
So I'm kind of on that side where I'm trying to save more money because I'm in the market as well to purchase more property. So as to whether I couldn't give too much advice on what I think will be booming, but, I said I'm more on the conservative side of that.
No, I like that too. Yeah.
Always number one, though. Always number one, real estate, I think.
Yeah, I agree with that 100%. The reason I ask is because there are so many people out there who are looking for the next greatest way to make a gazillion dollars. And, tried and true real estate purchase and hold or purchase and flip or wait for the market to buy right and then sell right at the right time has always been the best way that most people get ahead, especially here in Southern California where the prices can be volatile and you just want to make sure you buy right and sell right.
Absolutely. Most
millionaires, they made their money through real estate.
Yep.
So I think, hold on to it, buy a property, sit for a little while, do some investments. If you're going to put some repairs into your home, always focus on the kitchen.
Right.
Always focus on the bathrooms. You get the most rate of return on that.
That's great advice. That's great advice. Thanks, Dennis, very much. Thanks for coming on the show, too. I really appreciate it, and we'll talk to you soon.
No problem. Thanks for having me.
And thank you very much. I'm Jeff Barton, your voice in the mortgage industry. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For questions or comments, send emails to info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry, 888-713-2929. That's the telephone number, and if you pick up the phone and give us a call right now, we can talk to you about your mortgage. You're sitting at home right now, and you're thinking, boy, what rates are going up. I really want to, refi, but I don't know if it's worth it. I'm in a 3.75% rate right now, but I've got so much equity in the house, and I want to fix it up, maybe sell it, or maybe my son needs to go to college, and maybe my wife and I need to take a long trip. I mean, there's a lot of reasons why you need to take that equity out, but you don't want to lose the equity based on the rate that you're going to have. It's going to be 4.5%, 5% now, so what the heck am I to do? This is a dilemma of a lot of people who are thinking right now, because as prices in real estate go up, and you bought your house in, 12, 13, 14, 15, you've got a ton of equity in there if you bought it right. And anybody who bought in those times has seen prices accrue or go up by 6, 7% a year for the last 5 years. So that means you've probably got a good 20, 25% equity in the house, maybe even more. You want to tap into that equity, and you're wondering, what the heck can I do if I need the money and if I want to get that? You really need to talk to a professional. You need to give us a call. The number I've given you, you can email us, info@malibufunding.net, and work it out, figure it out. I mean, obviously you can get a home equity line of credit. There are those available, although they're not as plentiful nor as easy to get as they used to be. It used to be that once you got your loan, they would give you an instant line of credit. And this was, when I say used to, I mean 10, 12 years ago in 2004, 2005, 2006. The silly money days when they were giving money because your property value just kept rising, and you could refi, 1, 2 times a year, and a lot of people were doing that. They were living on the equity in the home because the equity in your house kept going up 10% a month. Well, it's not like that now, and trying to use or tap into the equity in your house is an issue. You still got QM out there, which means that you have to qualify. Your ability to repay is the main element here in terms of qualifying again for a refi, even at a higher rate. But if you need that money, and there are people who do need that money, there are medical issues if you're older. We had Tim Grayson on the show earlier talking about reverse mortgages. That's an option for those people that have at least 50% equity in your home. Those people who are out there who are thinking, oh, you know what, I'd like to tap into this money and buy something else, maybe in a different state. I know that we talk about the prices in Las Vegas, Nevada, and how they've gone up 13% last year. But really, you can still buy property out there under $250,000. Matter of fact, I believe, was it last week or the week before, we were talking about prices of $150,000 and under in Nevada, and I think there were 150, 160 different homes in Las Vegas under that price. Now, if you're in San Bernardino, Riverside, and you're certainly listening to my voice right now, you're thinking, well, you can't find anything like that around here. Well, that's true. But if you did take money out of your house and you did want to buy an income property, right down the road, the 15 is Las Vegas, and there are opportunities to buy and rent. It is a way by which you can take money out of your property. You still have a terrifically low rent, a low interest rate. I believe right now your average, well, let's get to it. What is the average? I have it right here in front of me. Let's take a look at rates and what they are currently. All right, here we go. And this is an amalgamation, kind of an average of interest rates across the country. The conventional 30-year fixed today, 4.75, and the APR is 4.61%. So we're still under 5%, but that, when you're looking at 2 years ago and your average 30-year fixed rate was 3.5%, this is saying it's gone up a point and a quarter in that amount of time. And in June, the short-term interest rate, the Fed said they're probably going to raise it again. I think I read a statistic today which said that 98% of the survey, or the survey respondents, which are the Fed board governors, of course, and their staff, said that, yeah, you're going to see a Fed interest rate hike, which, by the way, is being priced in this month. So by the time we get to June 15th, which I believe when the Federal Open Market Committee meeting is, that's when you're going to see rates rise. So the 30-year fixed rate today, 4.75%. The conventional 15-year fixed is 4.292, which is really 4.3, right? I mean, let's figure it. So the difference between the 4.3 and the 4.75, obviously you're going to have your payments go up if you're in a 15-year, but the rates are lower if you're going into a five-year ARM. And you know what? The ARMs are a pretty good product, and I'll tell you why. If you're thinking like the client I've talked about all day on the show, they don't want to live in their property more than 3 years. Maybe 4 years, because they want to escape the short-term tax rate that's going to be on that. The short-term capital gains tax rate is now, instead of 2 years, which it was for, I don't know, 5 or 6, 7 years during the recession and the recovery, it's now been upped to 4 years. So if you buy a house now, you got to wait 4 years to escape the long-term or short-term capital gains tax. Anyway, so this 5-1 ARM would fit nicely into that kind of product, because if you want to pay the less and then pay the less in taxes, but you still want to buy something, a 5-1 ARM would be great. It would be great for a client of mine because, and I think that is the kind of loan they want to get. They want to get a VA loan. They want to do a 5-1 ARM. Okay, that's terrific. In today's market, 4.25%. Now that's down a half a point from a 30-year fixed. And if you're going to be in that product or in that house for only, 4 years, it makes 100% sense. Let's get into the 30-year FHA, 4.5%. Well, that's not too far off what the conventional 30-year fixed is. But you're only paying 3.5% down. But remember, there is a fee that you have to pay up front plus the MIP fee. So the actual APR on this loan is probably going to be a great deal higher than that. Call your loan officer. Call us if you want, 888-713-2929. We can certainly help you out with a payment schedule before you decide to do anything. Let's see. The VA loan, 30-year fixed, is at 4.675, 15 years, 3.8, and the 5-year ARM VA is 4%. So you can see this line here of rates that we're offering, or not we're offering, but that they're being offered. If you go, I go to Mortgage Rate Daily, and you can see what the general mortgage rates are. Obviously, you can get to cheaper rates if your credit score is over 740. That's considered golden. Obviously, the credit scores go from, let's say, 400 up to 850. Anything over 740, and it's considered A-plus paper, so you should get the best rate. Regardless of blended rate, regardless of the different products that are now currently out there trying to change the way lenders look at risk. They're all new type of products. Generally, most lenders will look at your credit score in terms of trying to figure out what the rate you're going to do. So if you're above 740, that is absolutely terrific. Okay, cost in the loan, what you have to do in order to get the loan is beyond just, applying and getting it. There are recording fees, there are credit, escrow, title. Maybe you want to pay a discount point or so to lower the rate. All of these are fees in the loan, and these are some of the things that we talk about each and every day. All right, I want to bring Darrell in here for a second. What is it exactly that you can do to your home to actually increase the price? We have 4 or 5 different ideas, and then a couple of do's and do-nots. What do you think?
Well, I heard earlier they said fix up the kitchen and the bathrooms.
Yes, and you know what? That's true. If you are like most families moving into a house, let's just limit it to people who have a husband, a wife, and they're looking, or a husband, or a wife. Let's not discriminate against anybody. But if you are a family and maybe you got a couple of kids too, yeah, kitchens are the number one, because most families spend 60-70% of their time in the kitchen, little kitchen dining room. So, yeah.
We watch a lot of those flip or flop shows.
Love them.
Yeah.
Yep.
And the first thing they do is they walk into the front door and say, I'm going to blow out this wall and this wall.
Yep.
And this open concept thing seems to be the talk.
It came from California. California is always a trendsetter when it comes to homes, their designs, the function in the homes. The idea that the dining room is dead, I believe it is. I don't have a dining room. You have a dining room?
No.
No, exactly. So most people use sort of an open kitchen to a table where everybody just hangs out, and it's even incorporated TVs and couches and everything else. So spend your money wisely, but do it on the kitchen first, is into appreciating your house value.
Sure.
Give us another one. What do you think?
Well, my mistake was a pool. I just did it for my pleasure, but
Right.
It doesn't really increase the value of the house that much.
No, it doesn't. And unfortunately, everybody likes a pool here in Southern California. If you're listening to the show and you're not in one of those climates that uses a pool 9 months of the year, but we do out here, and you know what?
We love it.
Yeah, it does not increase the value of your home as much. I have a person over in the valley, San Fernando Valley, who put a pool in, and they jacked up the price of the house they're trying to get by $40,000, $50,000, which is what it cost them to get the pool, thinking that no, it doesn't.
Doesn't do it. I would say, landscaping, hardscaping outside.
Yeah, anything that you can improve the curb appeal, a nice white picket fence. I know that sounds trite, but it's true. Anything that you can have, nice trim lawn, or you put in the fake green, which we did on our property. It looked great.
Yeah, well, the big thing now is, landscaping that's also drought tolerant.
Yes, absolutely right. And I didn't know this, but one of the communities I saw recently, which was in one of these drought communities, which all of Southern California is, had large collection devices.
Oh, for rainwater.
For rainwater, and it's required now in a lot of LA County houses.
Got a friend in Simi Valley that went with the solar upgrade on the roof, and his electric bill is 3 cents.
It's
4
great.
cents.
No, I think that's great. We talked a little about that in terms of how to pay for it.
And then he got a tax return. He just paid it all off, so it wouldn't be a monthly drain on his finances.
That's great. I like solar. I don't know if it adds to the cost or the value of the house, but I do like lowering the bill.
Yeah, going forward, it's a neat deal for him.
Absolutely. Thanks, Daryl, for jumping in there. I'm Jeff Barton. I really appreciate you all listening to the show today, and we'll be back next week. I am, again, Jeff Barton, your host for The Mortgage Voice, and we'll see you next time.
You're listening to The Mortgage Voice with Jeff Barton. For more on today's topic, visit www.malibufunding.net.
KCAA Loma Linda, 1050 AM, 106.5 FM,